Yo, what's up, guys? Do you guys know about the importance of the general market? Because honestly, the indices, the general market indices, are the number one indicator on whether you should be putting your money in the stock market or not. Okay, there are times in the market, right, bear or bull markets, where there's a huge difference in the ability for a stock to continue a breakout, or for the ability of a stock to maintain support levels and not fall through resistance levels. And that is like 100% determined by how the general market is doing and the behavior of the general markets. So if you look at if you invest your money in companies in the Dow Jones, like big companies like Intel and Coca-Cola and these massive companies, if you put your money in them and you see the Dow Jones every single day is kind of like struggling, right? Every single, like the past maybe 6 months, there's not really an uptrend there at all, or not even a flat trend. It's really just like a clear downtrend. Or if you can see that there are like really big dumps. You can see the value, the general market, the Dow Jones index is not hitting new highs every few months. Then you can tell there's a problem in the market, and it's not a good time to invest. And this is like a huge key thing that people really don't get. Like my friends and family who invest in the stock market, they don't understand the general market. They just say like, oh, like, man, I just had bad luck this year. This has been a bad year for me. I don't know. And they don't realize, like, if like the year from 2016 to 2017, actually 2015 to 2016, to mid 2016 was a bear market. Like, that was a terrible time to be investing your money in the stock market. Look at any stock, not any stock. Look at 80% of stocks. You'll see they struggled big time in that time. Like, okay, if 80% of stocks are suffering in that time, then your luck is going to be really bad, right? You're going to have a hard time making money in the stock market. So my point here is, you need to look at the general indices, okay? Every single day. If you're interested in the stock market, every single day you need to be looking at that. By the end of the day, maybe, or in the beginning of the day, just once a day, look at how the market's doing. So you know exactly where it's been, what it's been doing. You should know really close, like, where their general indice prices are at, like right now. Like the NASDAQ is around $6,010, I think. Dow Jones is around 21K. The Russell 2000 is like $2,000 right now, or 2,100. The S&P 500 is failing my own test. No, the S&P 500, I think they're around 5,600 right now. That one's a little tough for me because I don't have any stocks invested in there, and so I mean, it's very important though, because all the general markets move together. That's another point. Even if you're in the Dow Jones, you should be aware of the NASDAQ and whatnot. You should see maybe the NASDAQ's outperforming the Dow Jones by a lot, which it is actually outperforming the Dow Jones right now, and has been for the last like month. You should be aware. You should maybe say, hey, maybe I should move my money out of a losing stock right now and put it into a winning stock in the NASDAQ or something like that. Anyway, my one single point here is, watch the general markets, guys. They are the biggest indicator of whether you should invest or not. It doesn't matter if you have the most amazing stock ever. If the general market is bad, you shouldn't invest your money. Unless it's like a super stock. And when I say super stock, I mean like it is destroying earnings. It is destroying like growth, like Amazon. That would be a super stock, and that is a stock that you can invest in regardless of the general market, because it is going to gain support. But if the general market's failing, which it's not right now, but it was from like 2015 to mid 2016, you should not be investing in a majority of stocks. And even finding those super stocks is very tough, okay? And it's like really like kind of hard to read sometimes. So I just want to make that clear. Right now is a good time to invest, but when it's not a good time to invest and the general market's down, be patient. You're gonna save yourself money. You're gonna save yourself a lot of money probably. Okay? So that's my 2 cents on that. I was just thinking about it because the past like 4 days have been just kind of like me waiting for the general market, right? The general market started an uptrend, pretty big push, and the last 4 days I've just been waiting, like, okay, I know you're being a little corrective right now, like, it kind of came down a little. I was like, but this has been a strong bull market. Where is the update? I'm waiting for you, and today it's coming, and it is a nice strong update. Had a breakout on a new position I just bought yesterday. I looked at it and was like, damn, this is it. I gotta take my money out of one of my stocks and put it into this guy, because this is gonna be a big deal. And luckily, it's up 5% today, which is this is great. Like, this is a good market, and there are a lot of really good picks of stocks right now. So anyway, subscribe, like the video. Peace out.